This is Bloomberg Businessweek with Carol Massar and Tim Stenovec on Bloomberg Radio.
So we've talked about this a lot, Tim, that we've seen the establishment, financial community, BlackRock, State Street, Janus Henderson, many other money managers who spent years rolling out sustainable funds, looking to capitalize on surging interest in ESG investing. And now they've been abandoning an increasing number of those products in the U.S. amid political backlash, and investor scrutiny.
Yeah, also recently, UK Prime Minister Rishi Sunak rolling back some of the country's climate strategy. Meantime, Carol, the EU has been accelerating its push to become the first climate neutral continent. A lot going on in what feels like a reckoning when it comes to ESG.
It does. Every day there's headlines. Our next guest is definitely involved in this world in the investment space. Back with us is Garvin Jabusch. He's co-founder and CIO of the asset manager investing firm, and they are investing in the so-called next economy. We've talked about this with him before. His firm, Green Alpha Advisors, he is based in Colorado, but he's back in our Bloomberg Interactive Broker studio. How are you?
Doing well, Carol. Good to see you. Good to see you, Tim.
Good to see you.
Good to see you. Being based in Boulder.
Yeah.
Does that shape kind of how you look at the world?
It probably does to some extent. You know, we founded the firm in San Francisco, my co-founder Jeremy and I, when we were still working for the Getty family office doing green tech vetting for them. And we subsequently moved it up to Boulder. But being there in the land of the sustainability mindset and the outdoors sports world, it definitely does color your thinking a little bit.
Well, how does it make you think differently about how you invest, though?
With respect to like stock picking and portfolio construction, I doubt that it really does. Overall, in terms of mindset, you know, I try to think about, it's funny you bring up ESG because we don't really think of ourselves that way. I think a little bit more in terms of, you know, you said our term next economy.
Right.
The reason I ask is because, you know, it's over the weekend we were with some neighbors, and you know, Park Slope and Brooklyn got just hit with rain over the weekend, and everybody was talking about all the rain that they got in their apartments or in their houses in the basement and stuff. And our neighbors were saying, you know, we're going to install solar because we feel like we got to do our part, which I thought was really interesting, because what we're seeing now, no matter where you live in the world, are the effects of a changing climate.
Yeah,
it doesn't matter if you live in Boulder.
It doesn't. No, we had one of our hardest winters. I don't know if you guys saw, but the Rockies just got pounded with snow last winter.
Yep.
After 10 years of decreasing snow, we got so much it was snowy and icy, you know, into June this last year.
Extremes, right?
Extremes both ways. So yeah, I think you're right. There really is no safe place to go. And if you read like the new IEA report about how bad it's getting, they will say we need to stop new development of oil, gas, and coal immediately. Right? When IEA says that, you know, we're kind of near a tipping point or an inflection point. I'm sure you guys both know. July and August were the first, and then again subsequently the first hottest month on Earth overall, even including the austral winter going on just then. So yeah, times are, you said it in your last segment, times are super interesting right now.
So when you think of the next economy, what is kind of the cross section with ESG, and particularly, like, I do think about climate change and what is the next economy in a world that is, no doubt about it, there's just things we cannot go back to because of climate change.
Yeah, thanks for that question. ESG, I view, and opinions definitely do differ on this, but I view it as bringing some of the elements of thinking about sustainability or other subjects that are important to people, such as justice, such as gender equality, such as DEI in general,
right,
into the investment equation in a way that's, in my opinion, pretty incremental, pretty relative. Like a lot of ESG funds, including, you know, you mentioned BlackRock, will do a sorting survey of oil and gas companies and then pick the greenest one to put in their ESG product. Well, that's good as far as it goes, and in relative terms, it is more green than a standard, say, index fund.
Right.
And yet, it still is invested in the things that, as you correctly point out, we can't continue to use indefinitely if we think we'll have a livable climate indefinitely. Right? So those things don't go together. So noticing that disconnect, we came up with a new philosophy. We call it Next Economics. And really what it comes down to, Carol, is what are the things that the world can't do without, is not going to be able to function without, and continue to have a growing, thriving economy indefinitely without? And then can I find companies doing those things phenomenally well? When I can, it's a relatively easy call.
Is oil one of those things, though?
Mm-hmm.
It's not.
It's not. Oil is, you know, petroleum-based products are everything, right? When whether we're talking about plastic bottles,
Yep.
Whether we're talking about how you get a pair of Nikes from, you know, the port to the Foot Locker or your
I'm
home.
wearing right now. So yeah, I flew over here today. I hear what you're saying.
I mean, explain to me the world where oil doesn't exist.
Yeah, so we have a longer time horizon. We think in 5 and 10 year increments. So we're not traders, we're investors. We buy things and wait for them to compound as they start gaining market share away from their more destructive legacy predecessors for whatever their function was in the economy. That could be transportation, that could be materials, that could be just energy generation. As all these things transition to something that can thrive indefinitely without making us crash through the planetary boundaries, which I don't know if you saw the report about that, but we've already crashed through 5 of the 9 and we're on our way to more. But as fantastic new companies with very economically competitive replacement technologies for everything that came before start occurring, they start gaining market share away, meaning they also not only are they helping us get to a sustainable world, but they're growing faster than underlying GDP, which gives me a great shot at long-term very competitive performance while I'm at it.
So be specific, like what kinds of companies?
So it depends on the sector, because we are cross-sector, cross-industry, but
Right.
You think about energy first, right? So renewables, battery storage, but let's get away from that a little bit and into some of the stuff that Tim was just bringing up. What about petrochemicals as opposed to just fossil fuels, right, for travel? There, I'm a huge fan of biotech, and especially where biotech is converging with AI to do things like make very interesting new advanced materials. These are still early, right? But you see CRISPR gene editing colliding with agriculture, colliding with material science,
Right.
to make very, very plausible and cheap and indefinitely sustainable replacement materials for plastics, for waterproofing, for insulation, aerogels as opposed to pink fiberglass, for example. All kinds of interesting stuff all around the economy as long as you look. And really, Carol, back to your question about ESG, I don't think it's about fact-checking every little detail in every company. I think it's more about frame-checking. You've been saying it. We live in this unprecedented time. The world's different than it's ever been.
Right.
And it's a little bit crazy to fall back on the old modern portfolio theory, in my opinion, which Markowitz wrote way back in 1953, because you can't respond to an unprecedented situation by saying, well, we know how this works, because we don't. It's unprecedented.
Absolutely. So how do these next economy companies that are maybe going to take 5-10 years
Yeah.
to really develop?
Yeah.
I mean, the establishment kind of stays in place until these guys can scale up. Like what
Yeah.
makes the shift in whether it's energy, whether it's healthcare? There's so many things, pharmaceuticals, making plastics, like so entrenched in our world right now. So what does it take for the lever to really move 180?
A couple of things. One,
Sorry, there was a lot in there. I
There
apologize
was.
in advance.
I know we could have a seminar about that, but no, they have to be phenomenally effective. They have to work as
the
well.
essay question you never want to answer, but go ahead. It's
I could
yours.
have a GPT do it. It could do it. But it has to work as well or better than its predecessor, and it has to be economically competitive. Like, finally, we have EVs starting to be cost competitive with internal combustion engines, and they are so much cheaper to operate. Their cost of ownership is so much less that you're finally starting to see really strong penetration. Like, maybe it's going to hit 25% of new sales in California this year. This is a tipping point where economists
We've
say
talked
there's
about
no-
the tipping point, right?
Yeah.
Yeah.
So tipping points do come,
Yeah.
but you do have to be a little bit patient, and it's for the long-term growth investor, which is what we are, right? So you are in a little bit early, but when it pays, it really pays.
Hey, we only have a minute left. You're going to stick with us, though, and we're going to come back and do more. But just talk to me about performance.
Our long-term performance is really solid. Our average annuals are much better than their benchmarks, quite a bit ahead of their benchmarks. But as you guys know, this last 18 months has been tough for growth. So we've underperformed about the last 18 months, including today.
But tough for companies, tough for advisors who don't include oil companies, too, last year.
No, that's true. That's true. It's not exclusive, and you saw REITs take a lot of punishment as interest rates went up. It wasn't just growth stocks, but it really was disproportionately growth stocks, especially the handful that I really have long-term conviction in that are still pre-earnings. That just got destroyed, right? I still think if I can go to portfolio level stats for a second, what I'm trying to do is make sure to assemble a portfolio that is cheaper than the big indexes, especially SPX on a price to book and on a price to rev basis,
Right.
but has rev growth that blows it away. So right now, my rev growth is about 60%, which is 6x SPX,
Wait.
and about half the price.
I want to get back to our guest, Garvin Jabusch, co-founder and CIO of Green Alpha Advisors, an asset manager investing in the next economy, as they describe it, still with us in studio. It's so funny. We were having a great conversation about EVs. I mean, is this Is this it, you think, in terms of automobiles? And are you investing?
Like,
Are there investment
what do you mean,
plays?
like hydrogen versus
Yeah,
EVs?
like, are there
like,
other options? Is this just a stopgap for, I don't know, 20, 30 years?
I'm sure that in some ways, if you're taking a very long view, I'm sure that in some ways it is an intermediate step between, ICE and somewhere else. But I think it's a long stopgap.
Yeah.
Because for now, economically and in terms of material and resource availability and just the price it takes to build one and to run one, it's so much more competitive than hydrogen or almost any other zero emissions drivetrain that you have. That I think, it's the thing now. And battery technology does keep improving every year. It improves about 12% in terms of density every year just because it scales and we learn, about Wright's Law and about just manufacturing and operating leverage. So, in that means in 7 years they'll be twice as cheap and twice as dense at the same time. So if you have a 300-mile range car, it'll be 600-mile range for about half the money for the battery pack. So yes, I think they're very clearly the future.
What about the components that go into these batteries, though, and the fact that involves mining? It involves, sometimes tenuous relationships with other countries.
Geopolitics.
Yeah, all of that.
As Carol would say, complicated.
It's complicated.
It is super complicated, and yet whataboutism is not really a valid form of argument, but I would say it's certainly no more so than the fossil fuels economy.
That's a good point.
And then secondly, the extractive event. When you're talking about pulling out a bunch of lithium from the ground, you do it once and then it's in a vehicle for 10 years and then it can be, J.B. Straubel's company, Redwood Materials, will recycle that for you and it remains in the economy. So yes, there's this destructive extractive event, and yet that material can remain in the economy more or less indefinitely, whereas when you pull oil or coal out of the ground, it's the ultimate non-renewable in that it is consumed entirely on its first use and you literally got to go back to the well. So in relative terms, you're correct. There's extractive and it can be destructive, but it just isn't nearly as bad as the fossil economy.
So how are you investing in all of this? You've got your big picture, your macro.
Yeah.
So I'm looking at your ETF that you guys have. Taiwan Semi's in it, Applied Materials, Vestas Wind, IBM is in it.
Yeah.
Why is IBM in it?
It's funny. People still think...
Sorry, IBM. No diss, but I'm just trying to understand.
Don't worry, IBM. I got your back. No, people still think of them as the big IT consultancy, and that's not really them anymore. Now they're really an innovation powerhouse, focusing on things like blockchain technology, meaning zero trust ledgers, to AI, to quantum computing. The real tools of the next economy that are going to help us solve problems, very much the same sort of reasons that we have other AI names in there, such as TSM.
Hey, Garvin, I want to talk about AI in terms of, how much compute power it takes to actually do these calculations, to have these, smart programs that can do these things. That's kind of hard to justify, right, from an energy intensity perspective? Yeah,
they're huge power hogs. No question about it. There, I think about the energy transition. Really, Tim. Here again, I take a 30,000-foot long-term structural view. I don't think it's the use case for energy that's the problem. It's the source. And as the energy transition continues, and there's more and more wind and solar, of course, with storage, and possibly if Bill Gates is right, and anybody ever deploys a working one, small modular nuclear. I'm not invested there because I don't see the economics in it yet. But possibly geothermal, the deep geothermal that can be full-time baseload anywhere, right? Various, who knows? Possibly even fusion at some point. They've got the ignition going on that finally. So okay,
we've talked a lot about that actually.
Yeah. So it's all really interesting stuff, and it's all coming. And the part that's already here is the wind, solar, and storage, right? And it's pretty effective, and it's gaining market share every year. In that, it's almost all of the new marginal capacity coming online every year. So, fossil fuels are still 82% of the global energy mix.
Right.
But this is down from 87% just a few years ago, and the trend is going to continue. So, I don't think it's the use case. I don't think it's, oh no, Bitcoin mining is destroying the earth. I think it's, well, no, the power grid is. And as we continue the transition, we'll be able to use as much energy as we like for whatever use case. And I think AI is going to be critical to helping us solve our problems. I couldn't get over how much I like Mustafa Suleyman's new book, The Coming Wave. If you guys haven't checked that yet, you probably love it.
Have we checked it out?
No, I don't have it.
All right, we'll have to check it out. I'm looking at, from your website, we only invest in companies whose products and services address the global economy's greatest system-level risks. What are our greatest system-level risks?
We put them in a few buckets. Of course, the climate crisis is sort of the granddaddy of all of them, and a lot of things fall out from that. Tim was bringing up extreme weather earlier. That's certainly one of the things. But also resource degradation, especially topsoil, water, other key resources that are being degraded rapidly. But then also human disease burdens. That's another reason we like biotech. Those
Moderna's in your top holdings?
Yep. And we were, this is one where the long view did work. We were early to Moderna. We love their intellectual property around being able to modify mRNA to affect phenotypic change in an organism so that it could resist a disease. We knew that that IP estate was worth a lot, even though they were still pre-earnings. But, we bought them in 2019. We didn't see the catalyst of the pandemic coming, but we were sure glad we held them when it did hit, because that was, I don't even know how much of a returner for us.
You think they can they use this technology for things like cancer?
Yeah, in fact, they've got several candidates in the pipeline.
And you're optimistic about those? Candidates are one
to varying degrees. Yeah. Well, that's a good point, Tim. And what I really like about them is that right now they've got about 29 shots on goal in their pipeline. They don't need all of them to be blockbusters, right? Just a couple will do. And they just had their science day, and they're projecting 15 to 20 billion in annual revs from their pipeline drugs by 2028. Not that far out. Yeah. And still 5 to 6 billion on COVID from now to then.
Jamie told our Emily Cheng today in an interview, your children are going to live to 100 and not have cancer because of technology. Yeah. And they talked a lot about artificial intelligence.
Jamie Dimon, right? You call him Jamie.
I call
Was
him
it Jamie Dimon?
We're like
yeah.
this.
You know what?
Did I say Jamie?
Yeah.
It is Jamie Dimon.
So. I didn't really know he was that much of a tech optimist.
He's kind of like Madonna, Beyonce. You only have to have
Jamie.
one Taylor.
In our world, that's true.
But I mean, the whole idea of AI changing things. What is your kind of biggest AI bet right now? Just got about 30 seconds.
I'm a huge AI optimist, and I think that the confluence with biotech is where most of the gains are going to be. Not just in health, but surely there. And I think we could very well be living in a cancer-free world. He could be right about that. There's a company, Verve Therapeutics, that is doing a gene switch off in your liver that will make it so you don't make LDL-C anymore, meaning heart disease could be a thing of the past within the next few years. So yes, AI is needed to be able to mash all the massive genomic data, but then so is biotech. So the confluence of AI and biotech, I think, is huge, and it's going to define the next century.
Fascinating, right? We talk about some, like in terms of innovation, healthcare, medical, like it feels like it's lagged, but I feel like with COVID, messenger RNA, like just there's a lot of things in AI that I feel like they're kind of the next wave.
I couldn't agree more. Gene editing. Interesting stuff. Walter Isaacson, who just wrote the biography of Elon Musk, his previous one was about Jennifer Doudna, the discoverer of CRISPR-Cas9. Yeah. Equally fascinating and also worth a read. Not that I'm here to do book club, it sounds like suddenly. But
well, it sounds like we are. 2 books on our list. Garvin, great to check in with you.
All right, great to hang with you guys.
Safe travels home. Garvin Jabusch, of course, co-founder, CIO of Green Alpha Advisors here in studio.